Afternoon, guys. Welcome back to another video. Today is Saturday. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you'd like for me to cover in my next video. Now today we're going to take a look at the NASDAQ 100 from a fundamental, a technical, and an order flow perspective. Now the NASDAQ 100 is quite interesting, especially with everything that's currently going on in the US market, as well as the situation between Russia and Ukraine as well. And there is a steep decline coming for the NASDAQ 100, and I will be taking you through all of the reasons exactly why we can expect this to happen, ladies and gentlemen. So we're first going to start with some technical data. So starting here on the monthly time frame, what do we have? Firstly, we saw the NASDAQ broke above this level of resistance. The market then broke above, came back to test it as support. In doing so, the market then also created new structure, which we can see clearly here. The market printed that level of support then got broken, and it's now testing as resistance, or it has now became resistance. Now dropping here on the weekly time frame, what do we have? Now from a weekly perspective, we can clearly see, first of all, now the last time I spoke about the NASDAQ, the market was sitting at this level, and I explained all of the reasons for why we can see that move to the upside for the market to go and fill in that week, which it almost did, and then we had that news come out. Now we can clearly see how the market had printed this information. The market came back to the neckline and the market started melting to the downside. Now purely based on a technical standpoint, when the market prints an information, you always expect to pull back to the neckline before the continuation, and that is exactly what the market had given us over here, and the continuation started. You can just refer back to the previous video, the breakdown that I've done on the NASDAQ 100 if you need a further reference there as well. Now dropping down on the daily time frame, what do we have? Now from a daily perspective, the market is also about to print a new W formation, but we can clearly see that this is the structure that the market had created over here. Now this level over here, ladies and gentlemen, acted as a level of resistance. The market printed this information and it's now testing as a level of support. Now going into next week, we could potentially see the market pull back into to go and hit that neckline before the continuation to the downside there as well. Alternatively, we could potentially see the NASDAQ melt further down, then pull back, and then continue to the downside as well. But from where we are standing now, that the bearish momentum on the NASDAQ is highly coming. Now the first article that we are going to look at is from CNBC. It says here, Dow drops 500 points and the NASDAQ 100 sinks more than 2% on fears of a Russian attack on Ukraine. Now yesterday we had one of the people at the White House that came out and they said that there is now a high possibility that Russia could invade Ukraine. But remember one thing, that's a speculation, it's not of certain, so we still need to wait and see if that is really going to be the case and if it really is going to happen. But that's not the only thing that we need to look out for. So if you think that this was the only problem that the US economy is currently faced with, guess what? US inflation data is like a punch in the stomach for the Federal Reserve, says the economist. Now we clearly know that the CPI data that came out in the week was very negative. And I'll tell you exactly what the correlation between the CPI data and the NASDAQ 100 is. It says here, the latest January inflation data came in like a punch in the stomach for the Federal Reserve, said the global economist. Now, he also said that means that the next rate hike could be as aggressive as a 50 basis points. Now, 50 basis points is double the 0.25 basis points that Powell was initially anticipated when they stopped the tapering process, which is due for March. But now they're talking about the 50 basis points. And you know why they're talking about the 50 basis points, ladies and gentlemen? That's because the inflation is a lot higher than what they anticipated. We can also see here that the US consumer index for January surged 7.5% year over year, according to the Labor Department. Both headline and the core CPI rose 0.6% to estimates for a 0.4%. So it was 0.2% higher than what investors were anticipated. This inflation data today came like a punch in the stomach, says Mr. Powell and his people over there. Nathan Seeds told the CNBC. Now, if you're thinking about, but how does the CPI impact, or how does the inflation impact the NASDAQ 100? Well, ladies and gentlemen, when inflation is sky high, what needs to happen is what it says here exactly. So the Federal Reserve needs to come in and they need to start hiking the interest rates. And what that means is that because they need to find the balance between the inflation and the interest rates. Now, one thing to keep in mind as well. Now, in the Federal Reserve open market, which is the FOMC, changes interest rate, it does impact both the economy and the stock market, because borrowing becomes either more or less expensive for individuals as well as businesses. So any impact on the stock market to a change in interest rate changes is generally experienced immediately. So we can expect a lot of this volatility coming through as soon as they announce the new interest rate hikes. While for the rest of the economy, it may take about a year to see any widespread impact. Higher interest rates tend to negatively always affect earnings and stock prices with the expectation of the financial sector. So as soon as we see the interest rate starts hiking, we can definitely expect a very bad Q1 earning report for a lot of the tech companies when they report on their earnings, because it does affect their valuation negatively as well. And also, the correlation between interest rates and stock market is when a company is seen cutting back on their growth or is less profitable, either through a higher debt expenses or less revenue, the estimated amount of future cash flows will ultimately drop. All else being equal, this will definitely lower the price of the company's stock. And the NASDAQ 100 is a composite that exists out of 100 of the top tech companies in the US. If enough companies experience these declines in their stock prices, the whole market or the key indexes many people equate with the market, like the Dow Jones, the S&P 500 and the NASDAQ 100, they will all drop massively. With a lowered expectation in growth and future cash flows of a company, investors will not get as much growth from that stock price appreciation. This can make stock ownership less desirable. Furthermore, investing in equities can be viewed as too risky when compared to other investments such as gold, silver, or platinum. However, some sectors stand to benefit from interest rate hikes, and we know who that is. So we know, like the safe havens, like I mentioned now, gold, silver, and platinum there as well. And also, one thing that we do need to keep in mind as well, because the reason for interest rates is definitely, to curb inflation, and that is to, promote saving as opposed to spending. And if people are not out there spending money, and a lot of these tech companies that's in the NASDAQ, which is Apple, Google, Amazon, and if people are not spending any money like they did when the interest rates were quite low, then the company's earnings will not be as good as it was when interest rates were quite low. So next thing we are going to look at is the order flow data, so the commitment of traders, and this tells us what the big banks, hedge funds and institutions are doing in the market. Now firstly, we can see here, based off last week's report, hedge funds came in and they closed minus 4,137 of their selling positions. They also came in and they closed 13,098 of their selling positions as well. But we can also see here, furthermore, they first closed 16,000 buy positions, then they came in and they closed another 4,137 buy positions again. They closed a massive amount of sorting positions, and we could clearly see how the NASDAQ this week got some momentum from the shorts that they closed. And we can also see how the overall net positions had increased slightly last week, and we can obviously see that in the NASDAQ 100 year, because we had that short move to the upside, which was basically just a correction in the market as well. But the way it stands now, for the long term, stocks are well on its way to decline, and we could probably see a 10% drop in the stock market overall. We could potentially see the NASDAQ come and hit this level over here market could go lower. We don't know, but from where we are standing now, you can definitely expect the massive sell-off to come in the, well, to happen in the coming weeks for the NASDAQ 100. Now that's all from my side. If you enjoyed the video, please smash that like button for the YouTube algorithm, and thank you for your time. And as always, let me know down in the comments what your thoughts are, and as always, cheers for ears.